Welcome to the Crypto Prism channel. Let's take a look at Bitcoin's latest market structure. First, let's look at Bitcoin's 1-hour chart. Yesterday's overall price action was a typical slow grinding decline. The strength of the rebounds kept getting weaker. Each high was lower than the previous one. Price was basically dragging downward along the short-term bearish rhythm. You can interpret this as the bears controlling the pace, not rushing to smash the market, but instead using this kind of slow grinding decline. To wear down the patience of the bulls, this kind of attrition is most likely at a certain point to suddenly produce an accelerated bearish candle and directly break through support. Now let's compare it with the daily chart. From the daily structure perspective, recently it has been printing small-bodied bearish candles, which indicates that selling pressure is not being released all at once, but rather continuous selling is dominating the market. More importantly, this sequence of small bearish candles shifting lower means rebounds get repaired and then continue to fall. From a trend perspective, it has not yet reached a proper signal of stopping the decline and turning strong. Looking again at the current descending flag structure, from an equal distance measurement perspective, the target is very clear. This main downward leg, pulled down from the highs, previously had a slanted upward corrective bullish pattern, and now we are in the continuation phase after the bullish pattern broke down. So to the downside, we sequentially look at the 59,800 to 55,000 target range. Among them, 59,800 has already been hit once, but that indicates this is not an absolute bottom, more like the first support receiving area. If subsequent rebounds are still in declining volume and structurally continue to form lower highs, then the probability of revisiting 59,800 will be very high once 59,800 fails to hold. The market is likely to follow through downward to look for 58,000 and then toward the equal distance target demand zone near 55,000. Now let's look at the moving average system. From the perspective of the moving averages, this is clearly a bearish alignment. Price is far away from the mid to long-term moving averages, and the recovery process is very weak. In this state, it indicates that upward pushes are more like giving short sellers a more comfortable entry point rather than a trend reversal. In the short term, we can watch the resistance levels above. First, on the 1-hour chart, look at the dense cluster area of rebound highs. Roughly in the 66,000 to 68,000 range. Above that is the 70,000 area. And then the stronger level near 71,800. A key resistance that has been repeatedly emphasized before. Only if there is strong volume breaking above these levels. As for support below, the nearest level is around 65,000. This support area, if short-term support is lost, it is easy to continue dipping towards 63,000 and 60,000. Further down is 59,800 and then the 55,000 area that we just mentioned on the daily chart. This support zone, which is also the downside target area of the flag structure. As long as rebounds do not change the bearish bias, unless there is strong volume reclaiming key resistance and reversing the lower high structure. From an operational perspective, it is more suitable to follow the trend. Watch the strength of rebounds. The key is deciding the switch between long and short before a daily level bullish candle appears, showing a clear stop in decline and strengthening. Do not easily treat short-term rebounds as a bottom reversal. Alright, that's the market analysis for Bitcoin. See you tomorrow.